He said, Moses, stop. If your idea isn't worth $1 billion, don't talk to me.
How can you raise over $500 million for your startup in Asia? I came to Kuala Lumpur, Malaysia to interview Moses Loh and ask him how he did it with his payments company, Sendit. His startup was one of the very first in Southeast Asia to get funding from YC, the Silicon Valley accelerator that was run by Sam Altman. Sendit now processes over $50 billion in payments annually. Moses says, if you want big investors to believe in your idea, don't ask them for money. You should first ask them for advice. Moses' vision is to create technology that can solve real problems for businesses in this part of the world and help them grow.
For our economies to go from agriculture economies or whatever we are, mining economies, whatever we are today, to really like service and digital economies, there's other bits of digital infrastructure that has to exist.
As a startup founder myself, I had a lot to discuss with Moses about what we learned from our journeys. Watch for some incredible stories around the sleepless nights spent coding, the ups and downs of startup life, and why he wants his employees to take unplanned surfing trips. Moses, we're here in your beautiful home in Malaysia. You started a startup in Indonesia. You have an Australian accent. Where are you really from?
Yeah, I'm half Indonesian, half Malaysian, born in Singapore, then grew up in Malaysia, then Australia, then the US, and then back to Southeast Asia. So a mix of everywhere, global citizen, but definitely from this part of the world.
I mean, it seems to be a trend kind of these days. I know myself, I was, born in the UK, Iraqi heritage, brought up in the United States, and now living in Dubai. And, that kind of mixed background and going through a lot of different experiences has definitely shaped me. You were actually the first Indonesian startup that joined the very famous Y Combinator startup accelerator. That was the birthplace of Airbnb, Dropbox, even Stripe. A lot of people know Sam Altman as the CEO of OpenAI. But in the Valley, I remember when I was there, I mean, he was just, famous for his role in leading actually Y Combinator and seeing all these startups as they birthed. I hear that you had a challenging first interview with Sam. How did that go?
Yeah, we had the unfortunate experience of having two YC interviews. So Sam Altman interviewed us for 10 minutes the first time, and he asked us all these questions as a fintech guy, as a Bitcoin guy, about Bitcoin and what we knew and understood. We obviously were shameful compared to him, but lucky for us, he was able to say, hey, we won't deny you straight away, we'll do a second interview. And in that second interview, about 4 hours later, we changed our tactics pretty significantly. And then great to have Justin Khan interview us, and I think through that, then we're pulled in to get into YC.
I would love to hear your tips on kind of how to get into something like that. Like, what was your experience actually getting into Y Combinator?
Yeah, it was fun breaking some bamboo ceilings or something like that. Got a few lucky breaks, so I think a few things are important. One is we were lucky to get Justin Khan as one of our interviewers. He turns out has some family in Indonesia, so when we said we want to build for Southeast Asia, he actually understood what that meant. So I think that was a lucky break. The second thing was we had the traction. We were growing 30% month on month, so the ability to prove that this is a real business opportunity, I think that helped. And then lastly, being able to get other YC founders that gave us good advice on how to get in and mentor us and do the practice YC interviews. That was all very helpful in getting into YC.
What's your thoughts on the best way to actually attract, American or international venture or risk capital into Southeast Asia?
So always in our cap table, we've tried to have three groups. We've tried to have developed markets, North Asia, America, regional VCs who can kind of bridge the gap between very local and very international, and then local VCs. For the international ones, depending on who they were, we had slightly different stories. So for the Americans in Silicon Valley, this is 2015, we said to them, you've either succeeded or failed in China and India, and you already have those strategies. But when you look at the macroeconomics of Southeast Asia, 650 million people, 50% under the age of 30, 120% phone penetration, this is the next big frontier. And then geopolitically, it's also very neutral. We're too small to fight with anyone, so we accept everyone. Whether you're coming from whichever superpowers of the world, we're willing to accept and bring you in. So a very natural place then for the next set of GDP growth to be had. And so we said, if you miss out on Southeast Asia, you miss out on the next growth frontier. And then as a payments business, we're a very natural index of what that looks like, because we'll serve the biggest tech companies if we succeed at our job. So that was a pitch for the Americans. For the North Asians, a little bit different. They understood Southeast Asia. They understood why it mattered. So then it became more about just why were we the right macro index play, instead of investing directly one by one. But choosing us meant we would give you regional exposure, which made sense for these North Asian investors.
If you have a crazy growth story, you're going to be able to capture the attention of investors anywhere in the world. And obviously, it's useful to have international ones as well as regional ones. And it's great to hear that you have kind of a multi-pronged strategy around your investors.
And it's been really helpful. I think the Americans that we had have built payments businesses that went from zero to IPO. So we could say, or exit. So we could say, hey, this is what it looks like. But then the Asian ones could tell us, here's how you navigate this situation right now. And I think having both around the boardroom has been pretty helpful.
And as a company that's raised over $500 million, you've had to convince investors from all over the world at different stages of your growth. What tips do you have on actually building those relationships with investors and convincing them to jump in on something that is quite risky?
I think there's a couple of fundraising principles I keep top of mind. First and foremost, advice I was told by a mentor: if you want money, ask for advice. And if you want advice, ask for money. So I'd never start the relationship by asking for money. It was always, I understood why someone had invested in something before that looked like payments, or someone had built a big business here in Asia. And so the goal was really to seek their advice, seek their counsel on how to build a business. The second principle I have is investors like to invest in lines, not dots. So being able to put down these dot points, and I'd be very clear, I'm not looking for money now because I genuinely want advice. And then over time, I'll prove to you what I can do. So that when the time comes for me to say, hey, we're thinking about raising a round, it's already a very easy decision, yes or no, for the person on the other side of the table. The last part then is, we're all humans, so investing a little bit out of FOMO. So how do you drive that process where people realize, I want to be in this round right now, and I want to say yes earlier rather than later? There's different ways to drive those dynamics. But
I love I love the principle of just asking for advice and hopefully that they're going to come after you. You've had to pivot what the idea was for Sendit like a couple of times. Maybe we go back to that first change that you made from from Bitcoin to basically Venmo, peer-to-peer payments. What led to that, and what gave you the guts to actually make that shift?
So the context of the Bitcoin remittance is we won an Andreessen Horowitz Berkeley vs. Stanford Bitcoin hackathon. And so we thought, oh, maybe this is a real business.
You beat Stanford.
Yeah, we beat Stanford. And so we decided, okay, let's launch this real idea. We even managed to, Sam Altman didn't say no and Justin Kan said yes, so we managed to even get into YC with this idea. But 6 weeks into the program, we had very little traction. And I think we'd made a bunch of bad assumptions around running this business. So for example, that Indonesian domestic workers in Hong Kong were willing to use a mobile app to send money. This is 2015, which at the time wasn't true. We made some really bad assumptions, I think, because we were sitting in our Silicon Valley ivory tower.
Sitting in the ivory tower thinking about what a domestic worker in Southeast Asia wants.
Exactly, and reading UN reports versus talking to real users.
Which again is the kind of like the ABCs of actually how you build a startup. But when you're somehow in the whole,
when you're sitting in Berkeley thinking that you know what to do because you're going to this amazingly higher class institution.
Yeah.
6 weeks into YC, I come back from Asia and we're failing. We have no traction. So it's very easy to pivot when you have no traction. we sit down with Justin Kan and we can see the other YC companies. Another Australian company was growing 20% month on month in profits. I was amazed. There was another Australian company was the first commercial drone delivery company to get a MOU with NASA. So we've got these kind of amazing traction points, and meanwhile we're failing. 12 minutes into the conversation, because I remember looking at the clock and seeing with 12 minutes past the hour, Justin Kan says, why don't you try to build Venmo for Indonesia? See what you can do. Launch within a week, see what you can grow.
Just threw that at you. What was your initial reaction to that as soon as he said it?
A little bit wanting to laugh and cry at the same time. Cry because launch within a week is a crazy idea to build an application and launch within a week. Laugh because if you zoom out for a second, it's just crazy that the founder of Twitch just tells you to go build something and try to do it within a week. So it was just this kind of out of life moment, zooming out, looking at the situation, being this is either going to be either way I'm going to remember this, but this is a make or break. We managed to launch a very bad product within a week. So going into demo day, we go from being the black sheep to being one of the kind of faster growing companies. This is one of these periods where I remember for a week straight, I RSI, so carpal tunnel in the US, from just like pressing the bank, because we'd still have manual processes because we'd launched in a week. And so to move money to, when someone withdrew, I had to manually do it in our bank accounts. And in Indonesia required a token. So for 7 days straight, I just pressed tokens and enter.
You were manually
I was
moving
manually
money.
doing it. 4 months later, we have 150,000 users. So vanity metrics really good. But I thought, our team thought to ourselves, hey, I actually don't think, so when we look around the world, e-wallets win when they have easy access to the source of funds. So Venmo can pull from your bank account, Alipay, WeChat can pull from the bank account. That's how e-wallets win. When you don't have that easy
You
pull,
need the connectivity, basically.
you need the direct pull from a bank account.
Bank account.
If someone has to push money, if I'm going to send you money, why push to an e-wallet and then push to you? I might as well just send you bank to bank. And we didn't have that pull in Indonesia. And so we said, okay, if you can't have easy access to the source of funds, then you have to become the source of funds. And we didn't have a daily use case where Gojek and Grab had that daily use case, or e-commerce have that daily use case. And so we said, I don't think we're going to win this in the long run. So that was a slightly harder pivot because we had nice vanity metrics.
Yeah, so when you say vanity metrics, what do you mean?
150,000 users.
So in that it's, a user is a user that, a lot of times startups, especially in the heyday of Silicon Valley, is just like, look at growth numbers, look at number of users, but what does that really tell you about the health of the business?
Health of the business, are they sticky, and are they willing to pay us something for it? Like, how are we going to monetize this? And at the time, no one cared about monetization. But I said to our team, even if we raise $1.5 billion and do this, I want to be number one at what we do. I don't want to be number 3, number 4. And I don't know how we do that unless we can make direct debit happen. And then, so we decided to pivot again. So that was a much harder decision because some of our investors are like, what are you doing? You've got great metrics. Like, no one's figured this out yet.
And we put money into this idea, not that idea.
We put money into this idea, not into whatever you're going to try to do next. And then we ran a race. We said, okay, 15 people in the company at a time. One of my co-founders had this idea around a consumer experience, a Shopify shopping kind of thing, kind of something that now looks like TikTok Shop, and to launch that. And then I had this idea around B2B payments because I had a founder friend who said, how do you move money so quickly? And I said, we built it ourselves. He said, I will pay you for this if you build this API for us.
Interesting. So you had 2 potential ideas.
One
was more like a Shopify.
A Shopify e-commerce, social commerce idea.
Social commerce.
Yep.
And the other one's B2B
payments.
Enablement.
Boring payments. And so other 15 people who said, you do what you want, free markets, you choose which side. 13 people chose the consumer thing. Way more fun, way more interesting.
Of course, it's like social commerce.
And that's again new at the time.
Yes.
Like, this is 2015.
Yeah.
And then one of my co-founders like, all right, I'll do this with you.
Felt bad for you.
Yeah, felt bad for me. But we said after a month, whoever wins, the whole team is going to go and do it. And so in that month, we're all scrambling and trying to build. But at the end of the month, the B2B idea has more traction than the social commerce idea. So the whole team follows their word, came onto the B2B idea.
Even with 13 versus 2, you were able to get more traction on the B2B side.
We released on Monday, they used us. It sucked so much that they quit 2 weeks later. But in that 2 weeks, I managed to find another customer to use us for payouts, and they're still our customer to this day.
Nobody remembers that V1.
Nobody remembers that V1.
Which is incredible. And now, I mean, you've reached a scale of it's like $50 billion of transactions, processed every year. 900 million transactions. I mean, it's impressive. And in many ways, I mean, you've taken somewhat of a traditional path into leading a large startup, which is, going to a top school like Berkeley, being a strategy consultant, going to YC, all these types of things. Curious as to, your take on to what extent, that kind of background is necessary. How has it helped you? And what recommendations you might have for people who are starting out in their journey, whether to follow that kind of path or try something different.
I know lots of founders haven't followed that path and succeeded and maybe made less mistakes than me, so it's not the advisable route. But I'll speak to each one and how maybe it helped. I think for me, BCG was helpful, mainly to get over myself. I think I was the kind of person, I was very scared to talk to people who were senior, very kind of come from hierarchical places, so it's hard to speak to someone who has a certain title. And I think BCG taught me that everyone's human. So having to be in the boardroom all the time, having to explain what I thought, I think made me realize, I can be in this room, I can be in these forums.
It's a consulting toolkit, which is useful, right? I remember my time at McKinsey, it's like, how do you structure your thinking and these types of things, and then obviously being put in front of senior clients and having to deal with it it's a nice toolkit.
It's a very useful toolkit. Then I think studying in a top tier school, yes, Berkeley is a great school, but I also studied in a not top tier school relative in the world, just a school in Australia, which I loved. And I think those experiences, it's really about those places taught me how to learn and how to talk to people. I think I was not very good, not the best extrovert. So being in an environment that just got me out and being part of clubs and all those kinds of things, I think those was the highest value versus the content at school, which these days you can teach yourself anytime.
To what extent do you feel that that's a prerequisite now to be able to attract funding or to build a serious startup, or can you actually stay here and study and actually do well as well?
Yeah, I would care more about the experiences to try learn versus the badges to have on the resume. So for me, the joy of going to the US or Silicon Valley was to learn how do startups get done, how do startups get built and get the right mindset. Coming from a small country like Australia, with tall poppy syndrome and a bunch of cultural context, I think going to America and learning what is possible mattered a lot. I'll give you one example. An adjunct professor at Berkeley, as you are at LBS, I sat him down for office hours and I came to him with a bunch of ideas. And 5 minutes in the conversation, he stopped me and he said, and he's a very nice guy, but this is just the way I remember it. He said, "Moses, stop. If your idea isn't worth $1 billion, don't talk to me." And at first I was like, this is a massive reprimand. I didn't think of a good enough idea. But then I also thought, hang on, that means he accepted the meeting and expected and thought I would show up with only $1 billion ideas. And in that way, he's the first person to ever believe I can come with $1 billion idea. So that's one of many mindset changes that happened when I was in Silicon Valley, meeting such high quality people. And so I think that matters more than going to some school.
And surrounding yourself in that you kind of drink that water. I remember when I was in Silicon Valley, it's just, that kind of environment, you just, from the people who you meet and the opportunities to get mentored by folks, it's hard to replicate in other places. Obviously, there's a growing ecosystem here, but having that bridge that you've had is definitely a leg up, it sounds like.
Having the exposure and having other people who've built billion-dollar businesses that can say, this is how I did it, these are the problems I face. And especially, this is a bit unique to Silicon Valley, is how open people are with their war stories, with their downs. I think so much of Asia is presenting a certain front and saving face, but there are people just being open. So I've learned a lot from people here too. North Asia has a ton of great founders as well.
It sounds like you had the opportunity to get advice from and get pushed by really impressive and phenomenal people. How were you able to actually build those relationships and get to a point where they feel comfortable enough to be able to tell you, get out of my office unless you have $1 billion idea?
So my mom taught me, or pushed onto me a framework when I was a little kid, which I've now adapted into having mentors who are always 2 years ahead, 5 years ahead, and 10 years ahead. So I've always kept this meta framework in my mind because it's most useful for whatever you're trying to hit. If that you can find people at those 3 stages, they can really help you. The 2 years ahead mentors can say, this is what you need to do tomorrow. This is what I did a year ago to be where you are. Over time though, maybe you grow faster than them, they grow faster than you, sometimes they end up as peers. The 10 plus year mentors are able to say, I saw 1980s 15% inflation. I saw 99. I saw what Amazon and Google did. I saw Airbnb in 2008, what they did to become number one at what they do. And so they can kind of give you that longitudinal basis, but they haven't operated in a long time. And then the 5 years are just that bridge in between that can say, hey, I've seen 1 or 2 cycles, but I also remember what it's like to be you. So having those sets of mentors. Now coming up with mentors, I have no secret plan except my rule is I just keep asking dumb questions, and if they keep answering, then I don't call them mentors, but I just keep asking questions. One little actionable tip that's helped is I'm very purposeful around engaging them. So I'll ask a question, and then I'll set a reminder 3 months from now to ping them back. So I meet them for the first time at a conference, an event, I ask a simple question. I say thanks to them within 24 hours, but 3 months later I'll ping and say, hey, I know you gave me this piece of advice. This is how it worked. This is what didn't work, and I'll ask another question. And I find this in the reverse now that people ask me for advice, very few people do that follow-up.
Very few. I mean, I can tell you for myself, if I had that definitely I would want to, spend time with that person. And has that then been the seed of some of your sort of relationships that have really?
Yes, I don't want to say names because I don't want to.
No, for sure.
But yes, I think some of the most useful advice I've gotten is actually I can't say it. Like someone like Justin Khan, founder of Twitch, sold to Amazon for $1 billion, or Phil Engelbrecht, who's founder of Shazam, another $1 billion company. I've been lucky to find these mentors. These people are also curious people. So when something doesn't work, they're like, why doesn't it work?
Yeah.
And they get involved. So it's been pretty helpful.
I'm curious as to the impact of your family on your entrepreneurial mindset, on your way of actually doing business.
So my grandfather on my dad's side, the way the story is told, so he was never educated formally, ran away from China during a certain time period. And his first job, the way he puts it, was collecting wood in the forest, bringing it into the town and selling it as firewood. So bottom of the pyramid, as you can get. Yeah. He eventually became a jewelry apprentice and then built a business that sent his kids overseas for university. So in one generation, changed everything. And then my dad was an accidental entrepreneur. He's a doctor by trade. He loves the medicine part. His boss ended up committing fraud, and the only way to keep his job was to buy his boss's business. For cents on the dollar. So
fire sale, okay.
Fire sale, boss went bankrupt.
Yeah.
And so he was an accidental entrepreneur. He never liked the business part as much as he liked the healing part of the job. But growing up in this environment where I have generational entrepreneurship has been, I think, a real fortune to have. And then when I was a kid, I had a teacher that made us play all these weird games. So made us play like a stock market game where we paper traded stocks and learned how it worked. We then played a life game where based on a maths test, we were given a job. And then me and my best friend, we were the doctors in this village.
Okay.
And in this
Following in the footsteps of your father.
Yes. And then every period you had to go to the doctor in this village. We didn't call it this at the time, but we realized, we had this monopoly thing. So we charged higher prices. Then we realized we could buy our friend's electronics business. And there's only 2 of every kind of shop in this village. So we dropped the prices on the electronics business, made our other friend bankrupt. So then by the end of the game had 2, what we would call monopolies, but we would just—
You had health and entertainment.
Health and entertainment. And so I remember that parent-teacher interview, that's when my teacher was like, he might like doing business.
There's something here,
There's something there.
that Moses might have.
And so I think my parents were very purposeful in then trying to culture that excitement.
And I guess for those who maybe aren't as fortunate to have like generational entrepreneurship and such like phenomenal, teachers when they were young, who are thinking about such a path, here in Southeast Asia or in emerging markets more generally, what advice do you have on kind of how to prepare in terms of the mindset and the things that are maybe beyond the classroom?
I think the beauty of the world now is that, for example, YC content is all open source and publicly available. The same things they taught us in YC, behind the hidden doors that you're not allowed to talk about, are also now on YouTube.
Yeah, there's like a Y Combinator startup school, even online, right? Yeah.
And the Stanford classes are all online. So the intellectual stuff you need to know is already
It's
there.
open sourced almost.
It's open source.
So that stuff's easy, basically, quote unquote.
And so if you actually action those, which is the same rules we have inside our company now, you can internalize those just by watching those videos. And many times I've actually sent those videos either to myself or to my team, like, this is the principle we need to be actioning right now. So I think that's a wonderful thing about this world.
But even on that point, it's just like, for me, it's hilarious because, even at Astrolabs, we would teach this stuff, or even, at LBS, I literally teach entrepreneurship. And still, in my job, I find myself falling into some of the same mistakes. Any tips on how to kind of break that sort of, our tendencies to fall back on maybe bad habits?
2 things we've tried to do. I've failed many times, and one of the tips is I do look some of this content every year. So around the end of the year break, around Christmas time, I'm re-watching these YouTubes because I'm sitting at home. And that always gives me kind of a different lens because I'm facing a different problem. So a different thing will strike me from the lessons. So that's 1. And then 2, having peers and advisors around, whether that's a boardroom, whether it's these mentors that I can explain a situation to. And like, it'll be the same set of rules over and over again, but they'll just be like, why aren't you doing this? I'm like, I know this already.
Yeah, I think like at Astrolabs, we were doing too many things, right? And everybody tells you focus, right? Pick something, do it very well. But it's just like functionally, sometimes it's hard to break off. And then finally, when we did that, you feel like, okay, everything's gelling, everything's moving in the right direction, so that the advice actually does make sense. Is there a story from your experience, maybe one of the failures or even at Sendit, where you had to adjust based on one of these principles or some kind of learning that maybe seems obvious in retrospect?
I'll do a tension in the balance. So I actually got, this is the opposite of the focus, but you brought it up, so it made me think of it. One of our mentors and the board was very much like, only focus on Indonesia. And this is kind of 2019 period. Only focus on Indonesia. We're not yet number one. We're top 3, but we're not yet number 1. So focus on home before you go elsewhere. Which I think is the right, and maybe I'll talk about advice and wisdom. Advice being, there's so many right pieces of advice, but wisdom is when do you apply the advice at the right time.
Wisdom is when to apply advice at the right time.
Because I think both pieces of advice, focus and non-focus, at the right time, it's a different answer. So in this case, focus on Indonesia only. Whereas you'd have the North Asians being like, why aren't you already doing 50 things? But through some game theory, I saw that another group of people were credible enough to win the Philippines if we didn't go right now. The other thing that happened was COVID. So we were roughly 50% travel, 50% fintech. Travel in 2 months died to 0. And lending, some Indonesian specific things happened, but within 2 months we lost 90% of our revenues. So we suddenly had just died. Now we'd done some prep work already. So despite being told not to, I was preparing the way and finding the team to go launch. And I think overnight success is a 7-year story behind. But yeah, so February, everything dies. April 2020, we launched the Philippines. We get distracted. But by the end of the year, we are back to all-time highs with all new customers because our travel hasn't come back at the end of 2020. So I think that's an example where it was applying the right piece of advice at the right time. We got lucky. Don't know how wise it was, but we got lucky in choosing the right thing. And that really grew business, and now Philippines is nearly as big as Indonesia for us.
And it sounds like this diversity of the diversity of actually mentors or advisors, investors helps perhaps give you sets of advices, and then for you to then be able to make a decision on what makes sense for me now.
And I love having that tension. I purposely try to bring people that I think will disagree with each other. And that example of North Asia being very used to going wide very quickly, and America, which is let's just do one thing forever. And both working. You see Alibaba doing everything, and you see Stripe doing one thing. Well, now they're more diversified. But you see these very different approaches, but both work. So then saying what works in our market for what reasons at what time, that's the beauty of having diverse thoughts.
And on that note, I know you took a lot from obviously being in Silicon Valley, in that environment, and then coming out to Southeast Asia in order to start a company. Are there particular management practices or ways of doing business that you wanted to take over to this part of the world, and to what extent were they kind of successful to stick actually in terms of the cultural context?
Yeah, so a few things come to mind. I'll start by saying, one of my favorite things to tell people from outside Southeast Asia is, in Indonesia, to turn right, you turn left and you do a U-turn. And I think that is such a simple but powerful example to anyone not from this region to understand how this part of the world works. Sometimes the fastest way to turn right is not to try turn right, is you turn left and you do a U-turn. And if you ever go to Jakarta Highway, you'll see that. But the point being, call it global problem. Payments is a global problem. Traffic's a global problem, but local solution. And so that approach has been, okay, we're from the East. We managed to, in my case, get to study in the West. How do we blend the best of both worlds? Or how do we build what we want? So for example, we said, what we don't like about how things operate here in Asia is the hierarchy. It's not the best idea wins, it's the oldest person wins, or whoever has the most senior title wins. And we thought that's not the best way to run something that's trying to grow quickly. We want to empower people at the bottom of the rung, if you will. And then the other thing is Southeast Asia is very passive aggressive. Like we don't get into direct conversations, but it means sometimes it takes so much longer to figure out what is it people are really saying or what is it that people really want. And it also means that if we have a mix of cultures, whoever is a louder culture tends to overpower conversation. So those two things we looked at and said, how do we kind of turn them around, or what lessons can we learn from somewhere else? And so we very much brought that Silicon Valley idea of meritocracy. And in this case, we kind of fixed both problems through a bunch of different tools. But for example, speaking English in the office, because it's famously recorded, like Korean, for example, has so many different levels of hierarchy when you talk. But once the pilots turned to English, they had a lot less flight crashes because they weren't speaking in a different way to each other, the co-pilot and the main
This
pilot.
is a Korean Air?
This is Korean Airlines. So it's a documented a lesson that once they changed to English, they had less crashes because the younger officer would push harder for what they wanted and they were making less mistakes as a team.
Just because of the change of language.
And then, so for us, it was, okay, let's change to English because it helps with this. We refuse to use titles inside the organization. And there's hierarchy in the language in this part of the world too, but we get rid of all those. You can't call someone by their senior title, like a Mr. or Sir, just by their names. English helped with that.
I mean, on this one, just to double click, because it seems like a particularly challenging to shift the cultural context. Like some people might say, oh, from the outside, that's not doable because there's a certain environment that you're operating in, and if you come in with sort of like a Silicon Valley approach to things and you just try to make it work here, it won't work, it won't stick. How did you enable or build the culture that's so different from what is outside the walls of the organization?
So I think we had to exemplify it as a leadership group, and I'll give an example there, and then we had to instill it in process so it was enforced. Exemplify it means as leaders, we would never talk to each other with titles. And when we hired senior people, older people in our case, we were very clear on what we expected and what we wanted, and they bought in on that. So for example, with this crazy thing that we don't do anymore, but in the early days, on your birthday, you got thrown in the pool. Because we were in homes, we were working out of homes. And this, I don't know how this tradition started.
Happy birthday.
Happy birthday in the pool.
Yeah.
And so people bring a change of clothes knowing they're going in. And the first time we had our senior accountant, she's a older person within the organization, but we're like, hey, we're gonna throw you in the pool too, because we're trying to exemplify this culture of everyone is equal. Yeah. We want good ideas to win, not just because you're older. And she's like, I'm fine with that, let's do it. So she went into the pool, and I think people in those early days recited that story as, yes, we truly are.
If she's going in the pool, then that means
we're all equal from a starting point. We want the best ideas to win. The other way we instill that in process is we also adopted, and I spent a short time at Amazon doing an internship, and I think inspired a lot by Amazon principles, is we do an Amazon 6 pages. So what that means is, in preparation for a meeting, someone has to write a document. Why not a PowerPoint slide? Because we don't want to sell for really good consultants. We want to sell for people who can write documents, and anyone can write a document. The other thing is, in an hour-long meeting, the first 10 minutes, no one's talking. Everyone's commenting on a Google Doc. And what that allows is that the loudest person in the room has the same loudness in voice as the quietest person in the room. So we have someone who doesn't speak English as a first language, they get to comment on the doc in the same loudness as the American direct person who's very loud. And then as we go through the rest of the meeting after that first 10 minutes, we're going through the comments. And that means that the softer person can raise their voice, where otherwise in a room they'd be dominated by a loud person.
How did you select out for the right, not just competence, but the right cultural fit?
I think most people talk about the questions that they do, or because I'm ex-consulting with case studies. But we only got to about 75% predictability in what quartile they would perform a year from now. And I wanted to increase that because it's so expensive to hire someone, especially senior people. We ended up doing something what we call a trial day. So we get someone, instead of asking a question, or investment banking, there's a super day where you go in and get interviewed 7 times. We do the reverse, where we said, you come in, let's find a real problem. Let's say, head of sales, Philippines. We'd say, how do we improve our sales teams? Just open question. And by the end of the day, we'll have that person present. But throughout the day, they're going to meet 7, 8 different people. We're going to have them meet some of the most junior people and also some of the most senior people. And what we find, for example, is if they treat the junior person or the person that brings in the water into their room in a way that I think is disrespectful, immediately a no. And the culture vetoes that we have in our hiring system, that person who's the most junior person or the person bringing the water has as much right to say no as the most senior person. And then it becomes a reverse interview. It's not asking them questions. Because they're helping to solve a real problem, they're getting a day in the life of. And so by the time they present at the end of the day, it also solves for people who are more actionable versus people who speak really well. And so some of the best sales kind of trial days have worked out by that person saying, hey, I spoke to 3 of my friends who are in positions of decision making at these other companies. They're interested in Send-It because of X, Y, Z reason. Let's go close them. And it's been some of the best trial days is like just very clear action versus like theoretical frameworks.
Yeah, we like to do some of that stuff as well. And in fact, one of the tricks that we use is have them prepare something during a block of time and then let them present and then just give them like some really harsh feedback, right? Just plenty of stuff that just went wrong, right? And then be like, you have some time to go like internalize this and try again. And the people who actually are willing to, lower their ego, take in the feedback, and learn on a fast clip is a really good predictor for somebody who would be successful in our organization, which is a very like learning organization. Yeah.
I love that. I had someone who came in for a trial day and he smashed it within like 4 or 5 hours. He already got the answer, and now midday check-in, or in this case, he'd landed in the afternoon. So 10 p.m. we were doing a check-in, and he'd already got it right. I was like, what's he gonna do? Like he's already finished it, he's got a whole day next day. So I was like, all right, I'll do what you do.
Yeah.
And I just gave him terrible feedback. Woke up the next morning at 7 a.m., he was still at the desk. I was like, what are you doing? He's like, oh, I needed to iterate overnight. I didn't realize it was so bad. So I felt a little bit bad, but he presented the next morning. I was like, the work ethic, the humility, the lack of ego.
Yeah, one dimension of culture is having, posters with principles on them, but really in the end, it's, how they're lived that makes a big difference. In what way are you and your kind of co-founders or the leadership in the team setting the example?
So in this leave idea, I've 2 of my co-founders do it very differently. One, he loves taking long breaks, so he'll disappear 4 weeks out of the year. No one will contact him. I have no idea what he's doing. Maybe he's silent retreat, maybe he's off in Barbados, no idea. But he disappears.
As long as he comes back.
As long as he comes back. My other co-founder, she recharges much more from more frequent shorter trips. So she does like a 4-day surfing weekend and is doing intense surfing, so a very different kind of activity. But that's what recharges her. So I think exemplifying it for the org. And then the final thing being trying to set expectations or set processes around, as a manager, you're in charge of the well-being of your team. And so after big projects saying, hey, massive deadline due, customer went live, they've been successful for a month, everyone take 3 days off. So trying to push these situations where we can really show to the organization, hey, we want you to take the breaks when you need the breaks. It's not always at Christmas, it's not always at some convenient time. It's based on, we want to serve customers well, but when there's time to take a break, let's take a break.
And what about the flip side? What about when it's just crazy intense, right? Sometimes, we talk a lot about how we need to set an example of being a very, having the breaks and doing but when you're in an environment where, you personally or you're the leadership or, staying up late nights and working 7 days a week in those sprint periods, what do you do about those times with the rest of the organization?
The beauty for me is some of the best cultural moments, what we will laugh about, drink about, talk about years later, are these crucible moments when we stayed up crazy times. I'll give an example. Is F1 2018, F1 here in Singapore around September. When we were much smaller, our ledger, 2017, our ledger went down. Ledger is a core part of payments processing. We were using an external ledger because we thought, use someone who does this as their full-time job.
So the ledger is the back end that kind of tracks.
The ledger tracks money in and money out of a system.
So the whole thing went down.
The whole thing went down.
And you're a payments company.
And we're a payments company. And we called the ledger company in the US and we said, when are you guys going back up?
We need our ledger. Yeah.
And I remember being at this, the F1 race kind of goes around this set of buildings. So you have super fast cars going by, and this was a penthouse party. I just met the head of Facebook for all of Asia. I just met the founder of Angry Birds. Like these quality people. And then someone calls and says, our ledger's just gone down. And so me and my head of product at the time, we're like, we gotta get home. And we called the American company and they're like, oh, we believe in work-life balance. We're not going to work on the weekends. I'm like, but you're a ledger company. This is the one thing that you do is deal with pluses and minuses and the balance. And so we decided, all right, we got to build our own ledger. Now, lucky for us at the time, Indonesian banks go down from 2 a.m. to 8 a.m. So we have a 6-hour period to go build our own ledger.
No way.
And this is about like 12 a.m. when it goes down. So let's call it 8 hours. So we decided to do 2 things. Number one, me and my head of product, and I can't code very well. So he's going to build his own ledger by himself, 2 of us in a hotel room. And then the rest of our team, we're probably about 20 people, 10 engineers or so, are going to go in a cycle of 2 hours on, half an hour off. And so we're going to build, the main team is going to build a ledger that hopefully can launch by 8 a.m. we're going to build a ledger here in Singapore that's going to launch by 8 a.m. And then they're going to keep iterating and build a better ledger that launches 24 hours later. And so I just remember we were just grinding. And for a week, we were just grinding because it was, we're lucky that 8 a.m. comes, both ledgers go live. The system survived till 12 a.m. that night. Goes again, we refactor and rebuild all these ledgers, version 2 of these things. And we managed to last a week, 2 weeks, but it's all hands on deck. Every hand on deck is working on this ledger.
You built a ledger overnight
We built
that functioned by the time the morning started?
that by the time 8 a.m. started, and then the next day when it shut at 12, our main guys were rebuilding the ledger and making it more scalable. And in Singapore, we were also trying to do the same.
I think one of the challenges in fintech generally and in this space in particular is the profitability, margins, the sustainability of the business. So what lessons have you learned there, if any, mistakes, and where are you, how are you planning on making this something that can stick?
Plenty of mistakes that we made here that we're learning the lessons of now. I think first and foremost, if we knew what we knew now, we would chase higher margin opportunities faster. So should have done a little bit more BCG work to say, what does that value chain look like in the supply chain of payments, and who gets to capture the most value?
Yeah, who's taking more value where? So where is the most value right now?
Not what we do.
Yeah.
So
Yeah, you're taking the percentage of the percentage, right?
we're taking a tiny portion at the very bottom.
Yeah.
And we're doing the hard work of licenses and dealing with all the regulation and compliance in each market, but we don't actually capture the value relative to others.
On your regional expansion, you entered into the Philippines. I hear that you knocked on the doors of and visited every single bank in the country when you were going into that market. To what extent is that kind of approach really helped you crack into a new market? Tell us about that entry.
The way I think about new market entry is 2 fundamental human emotions: greed, fear, and then finding the right team. The greed part is something that pulls you in. In this case, it's can you find a customer that's going to pull you in, someone that already knows you and trusts you. And in this case, we had a regional ride-sharing company saying, hey, the problems we know you fix in Indonesia, we have the same problems in the Philippines. Can you fix it?
We need you in the Philippines.
We need you in the Philippines.
Yeah.
And that's such a natural kind of reason.
Yeah.
So call that greed. The fear part becomes this game theory. And I mentioned, if we're an Indonesia-only business, we're trapped if someone else can become regional. And so we knew we had to go across, which is why I disobeyed my mentors when they said only focus. But it was always a matter of timing because you have limited resources. So that was our view and approach and framework in how to enter a new market. On the pinging every single bank part, it was this customer said, hey, we've got this problem, can you fix it? And we need a banking partner to that. We're one of the few fintechs where we don't compete with banks. Everything we do makes the banks bigger. So we need a banking partner. But we have this, we're an Indonesian company at the time only. We have these crazy ideas to build something that doesn't exist, direct debit. How do we do it? And lucky for me, I have no shame. The way we started Send It was I cold emailed 100 Indonesian sounding names when I was at Berkeley. Some were Filipino, but in the end. But out of those 100, 4 people replied. 2 people met me for coffee. 1 introduced me to his roommate, who introduced me to his dad. And everyone I know in Indonesia is from these few connections.
Wow.
So I'm all about cold emailing.
Yeah.
And I have no shame. I cold
you don't
email
get
to
what
this
you don't
day.
ask for. I mean, you have to put yourself out there. I mean, and it's really that grit and the willingness to just even, as a founder, it's not like you're outsourcing this to 3 levels beneath you or whatever, that you're, this is kind of core to making it work in a new market. And a new market's almost like a new startup in some
It's a new
ways.
startup. Everyone's new. And I think it has to, I think we should lead from the front. I think that servant leadership is all about, I'm not going to ask someone to do something I'm not willing to do myself or exemplify. Even just yesterday, I was on 2 calls where the customers wanted to yell at us, and I said, I'll be there. Yell at me, and I can apologize and say sorry and try to make it better. But the point is, I'm trying to show the team, hey, I'm willing to do this stuff. You can do it too. Here's some tips on how to take feedback from folks. But I think these details, just as watching you guys set up for this interview, but these details matter about how you drive and exemplify the right behavior.
And tell me more about the servant leadership and your approach to leadership.
I think so many Asian startups are too focused on the cult of the founder. Or if you look at the equity splits, how much one person gets versus everyone else. And for us, my personal goal is I want to change at least 150 people so that they never have to work again, which I think we can do. And then also launch people out and enable them to go build big businesses. And then for the selfish side, if I get to invest and they become billion-dollar companies, I'm set too. But
And on equity, you have a distributed equity program within Sendit. How do you think about actually incentivizing people?
so we have been, I think one of the biggest criticisms from investors to me is as a founding team, we own less than most founders would at this point in time. We've always had a pretty open ESOP program, and we had to spend so much time convincing people before ESOP was understood.
This is the employee stock ownership program.
Yes, employee stock option program, where employees get to own part of the company. It didn't exist. Other people weren't doing it. It sounded like this magical amorphous thing. And so I did a couple of things. One, spent so much time explaining it to people. But two, actually drove and pushed investors to give us liquidity programs throughout the years so that people could taste. And when an employee came to me, one of our OG, and said, this is crazy, I just earned more in like one little tranche being sold than my whole annual salary, and I was able to buy a house way faster than my peers. That's life-changing.
So the startup environment, funding availability, valuations, the entire ecosystem has been in a bit of a crunch in recent periods with layoffs and difficult situation overall. How has Sendit been, and how have you been personally dealing with the situation as it is?
Got a piece of advice as we were going through from one of my mentors who said, if people are giving away money for free, take it. So we were lucky to raise kind of 2 rounds leading up into 2022. So fortunate to have kind of a war chest going into this period, which I think is different than most. So our mode has, the other quote I really like is, be greedy when others are fearful and fearful when others are greedy. So hence 90% down in COVID, we decided to go launch in Philippines. Equivalently, 2023 comes around and we decide, well, let's go launch in 3 new countries. So this idea of trying to be counter-cyclical in our investment idea, that's our approach. The second is we made a ton of mistakes during COVID. Our business grew 10x, so we decided to hire 3x, totally wrong thing to do, and we had to unwind. So we have done 2 batches of layoffs, and those are public. A lot of mistakes learned in that.
Yeah, that must have been a tough time.
Those are some of the most painful to say to people. First thing I did is I called a bunch of folks that I knew had done layoffs before and asked them, what'd you do, what'd you like, what you didn't like? And so I got lots of different feedback and disagreeing feedback.
Advice, and maybe we're looking for the wisdom.
And wisdom, which one to apply. And so we tried to be pretty objective in how we went around choosing people so that we ignored whether they were friends or not our friends. We then tried to be on purpose more generous than most companies would ever be in our situation. And then we tried to, for those who are remaining, then say, hey, what are the cultural attributes we want to keep from the old world into the new world? Now that everything's so much more about efficiency and less about, like, the way I call it is like holding hands and singing Kumbaya. And an example of a mistake was one town hall with an Ask Me Anything section, and an engineer said, why am I filling out this massive feedback form about my performance? And when I dug in, I then found a situation where we had more layers in between me and the person writing the code than there were people in the team. And I just thought, that's fruit of a rotten tree. But it's a tree that I created, so it's a tree that I have to fix. And so part of layoffs was also cleaning out and saying, let's get rid of all these middle managers who are adding work that doesn't need to be done.
And I was going to ask you about the next phase for Sendit. What are you focusing in on in this next part of the journey?
For us, we've just launched 3 new markets. So very micro for like next year or so would be, hey, it took us 4 years to become number 1 in Philippines for what we do. Indonesia took us 6, 7. So it takes a while to really get these things going. And doing 3 at once is a bit crazy. But I think we can get there. So I think next couple of years is very focused there. Number 2 is then, I love the idea of building infrastructure for the region. So being able to say, okay, we've started with payments. There's more in payments that we want to do. But for our economies to go from agriculture economies or whatever we are, mining economies, whatever we are today, to really like service and digital economies, there's other bits of digital infrastructure that has to exist. And it's kind of boring. It's like building plumbing and building.
But that's where the opportunity usually is, right? It's like the building the infrastructure. It's like it's shocking how little attention is paid to the essential piping, and it's the piping that lets everybody else grow.
Yes.
I know Zen Capital is one of the new product lines. So you've been expanding geographically as well as on a product level. Can you tell us about the lending product and what your view is as to that potential growth?
Yeah, so the idea around the Zen Capital, this idea is we have a bunch of merchants using us for payments, and we want to be able to say, hey, people need working capital for different reasons. And in Indonesia, often to get a loan, you need to have been profitable for a number of years, existed for a certain number of years, and put up real estate. Now that's really hard for a lot of companies.
Especially startups.
Especially businesses, and someone may have a great business, but they don't have $500,000 worth of property to put up. And so Zen Capital is just our way of providing capital in different forms, whether it's interest, whether it's sharing revenues, different forms of capital to folks so that they can grow their businesses over time.
How do you think about making, all of Sendit as a group profitable when you're built on such razor-thin margins? Is that part of the product strategy? How do you think about kind of making that happen?
I'll call it like building a foundation of a house, I suppose. The foundation is this very low margin business. We can get profitable on that. So that's just about discipline on when you choose to hire. In our business, because we're always unit economic profitable, anytime we choose to stop investing in new businesses, we can get very far into the profitability line. Then it becomes what higher margin opportunities are there that are then what we call value added to the customers we already have.
And there's been a lot of movement in fintech in Southeast Asia. Obviously, it's been a hot sector globally. Where do you see the biggest opportunities now going forward? Would you recommend to somebody who's starting out a company? I know that you've been making some acquisitions already. There's some M&A activity. If there's specific areas that you think are ripe that you would potentially even buy a company in, what are those areas now within fintech?
I think for fintech, there's still, when we look at Southeast Asia compared to a developed market fintech, there's still so much yet to be done. I think in this part of the world, we think it's crowded, but it's not. Within payments, yes, there's probably a lot of payment players, both on the consumer side and the B2B side, but fintech is so much more. When you look at lending or just providing capital in all its different forms, InsurTech, still super early on.
Insurance,
yes. Super early on. The banking experience, super early on, both on the consumer and the B2B side.
Yeah.
Cross-border trade. ASEAN is one of the few parts of the world where intra-ASEAN trade is expected to grow as well as inter-region with every other part of the world. Like I think you look at Nubank in LATAM, you look at what N26 or Revolut or some of these folks have done in Europe, and I just say, because I get, or Chase Sapphire or Capital One in the US, like when you look at these experiences in other markets and then we come back to Asia, it's just like, it's so painful. And the protection on the consumer is not there.
Yep.
We work with all the banks. I'm not gonna say anything bad about the banks, but the ability to care about what consumers care about is so different than what I'm used to. So that's the opportunity, is like, can someone build a business model that is profitable, but also cares about the consumer?
The experience.
The experience.
I'd like to ask you to put your investor hat on and imagine yourself, early career, maybe you've just amassed about $10,000 of investable money and you wanna make a decision on where to put that money. So pick an asset, pick anything that you think would be, something interesting today to actually invest in.
And with my investor hat on, I have to invest in something else, not myself, correct?
Yeah, so you should pick something, not just continue to pour money into your own company.
I have a boring answer and I have a less boring answer. My boring answer would be around like having a diversified portfolio. But maybe let's do the less boring answer. There's a couple of themes that I think are really interesting. One is, how does the real hard parts of the economy get eaten more and more by AI and software? And then how does that interplay with geopolitics? So for example, if I was sitting in the US, something that just came up in the news recently, but it's always been a topic, is like rare earths metals. And so these are really important for anything we care about in our lives: electronics, semiconductors, cameras, phones. But the supply chain is very constrained and run by very few economies in the world. So depending on where you sit in this multipolar set of superpowers, there's easy access or not easy access to rare earth metals. So something like that where, like in the US, for example, there's only one mine for rare earth metal in the whole country, but it's so important to the supply chain. Something like that would be kind of an interesting place to figure out hey, where's a bet I could make that is technology enabled, but a really real world use case that is going to be hard to replicate.
How would you actually, so imagine again, put yourself in the shoes of someone kind of starting out and thinking, okay, that sounds interesting, but how do I actualize that? What investment do I make?
I love the idea of, in the gold rush, the company that we remember now as Levi's, not the people who hunted for the gold.
Yeah, not even the people who were selling the shovels.
No people selling the shovels, it's the guys making the pants. And so I really think about like, okay, if there's some macro trend to latch onto, then how can I abstract it back enough cycles to see who's going to benefit no matter who the winner is? And so I would be looking at, let's say I pick this idea of mining in whatever country, then say, which companies are enabling whoever's going to win that game to be able to operate. That's the reason partly why I chose payments, because we enable, the rising tide of Southeast Asia raises all boats, and payments is, everyone's going to need payments. It's exactly this idea. But similarly for some other application or some other niche, what is the equivalent of the Levi's jeans?
So the investment idea is something within mining, potentially rare earth metals. I'd love for you to rate that for me across a few dimensions. Okay. One is the risk level, right? One being the lowest risk and 5 being the highest risk. How risky is it?
I think the risk of the market, I think, is very low. Does the world need rare earth metal? Yes. Is supply chain constrained? Yes. Does geopolitics define that supply chains have to diversify? Yes. I think market risk is low. To me, it's about execution risk. If you're going to execute in Indonesia, that's very different than if you're going to execute in the US. In Indonesia's case, it might be like, can you actually get it done? In the US case, it might be like, can you get the licenses approved to run this thing? So I think that's the risk. I would say on a relative basis of like various tech things, less than 3, I think, out of 5 in terms of risk, versus like launching a purely tech business that may or may not have a market in the future.
All right, so 3 out of 5 for risk. In terms of accessibility, how accessible is it to make this type of an investment?
Probably like a 1 out of 5. Very hard to find the right companies. Very few people are able to do it. And it requires a lot of capital to start.
And growth potential.
Growth potential. I think this is one place which is like super underrated. So I'm going to give it, I'm probably wrong here, I'm going to give it like a 4 out of 5 because I think it's so necessary and it works right now. But if COVID happens again, or if another bad geopolitical situation plays out, suddenly we won't have access to these things. Although the Western world won't have access to these minerals.
I'd like to wrap up with a quick fire round of questions.
Perfect.
What's your favorite productivity hack?
So the thing that I like the most is I have my calendar sorted into colors so that I can every 3 months look back and say, did I spend the right amount of time on the right colors? For example, how much time did I spend talking to customers in the last 3 months? Because it's very easy to not get yelled at by customers. But I think it's extremely productive so that when I give feedback to product, I always have a customer thing in mind.
So calendar by colors.
Calendar
and
by
then
colors.
Look back on it and see, are you spending the right time? Great. Easiest country in Southeast Asia to open a tech company?
Probably Singapore.
The market where Sendit's seeing the fastest growth in Southeast Asia?
In absolute terms, Indonesia.
Go-to book or podcast that every entrepreneur or founder should listen to?
Easy one, All In.
Work from home or work from the office?
I love working from the office.
And what's the most exciting thing in tech that's off most people's radars?
Really boring applications of augmented reality.
Tell me more.
So using it back to the mining example, using it on like how to remotely solve a problem out in some remote machine somewhere, but solved by someone centrally.
Great. Study in the US or Asia?
US.
One financial tip you'd give to young people?
Can I give a long answer?
Yeah, sure.
When I talk to young people, I think about life as like you've got on one axis time and on one axis success, however you want to measure that. Let's say dollars. But we're all starting in the same place. What's the difference between, let me reverse the graph, so from your perspective, so time here. What's the difference between ending up high or low? It's the average incline, the average slope along that journey. So solve for things that will increase that average slope over time, not give you a higher number today.
Such as?
So for example, find a company where someone is willing to invest. Find a company where a mentor is willing to invest time to teach you how to increase your slope from here to here. Don't go somewhere just because it pays you more today. So therefore, best investment advice would be invest in yourself to increase the slope of your trajectory.
Well, thank you, Moses, for hosting us here on Money Moves.
Thanks so much for having me.
Now that you've heard how Moses did it, do you have an idea for a startup in emerging markets? And how much money do you think you'd need in order to do it? Let me know in the comments.